Hey guys, today is Tuesday. Yeah, really painful day today. I've lost my third funded account, unfortunately. Yeah, just still not destined to reach my first payout. Definitely really, I don't know, really a step back. Was not expecting that, I have to admit. I was feeling very well about my trading lately, but it's just insane. Trading a funded for me is still so different. I always feel way more emotional trading a funded account than an eval. Um, yeah, it's just really, I don't know, really painful. Really, I think that's the right word. Actually, quite painful. Completely avoidable. I mean, it's just me myself who's pushing the button. I know that it's not right taking so many trades, but it's just really difficult. Just yeah, once more a attempt which failed to reach the first payout. Yeah, I mean, maybe it will take even 4 or 5 or 6 funded accounts, but eventually we will get there. Because I am profitable, I can pass eval accounts while trading or taking many trades, not only like full porting them. So I know I can do this. It's just that I have to trade the same on a funded account. It's really, yeah, just a psychology thing, something to learn. But now I basically want to break down today's trading day. Really difficult conditions, I have to admit. Advanced trading conditions. Unfortunately, I made so many dumb mistakes today. I don't know why, but really a long time since I traded this bad like today. Was just really not really on the point today. As you can see right here, we are expanding lower after sweeping daily buy liquidity right here. Today's a expansion day. I did not trade today. Yesterday, sorry guys, because yesterday we had a no news Monday. I was content with that, and today we have a expansion day. So let's drop to a hourly chart, and right here you can already see, basically, still what's important to me, daily sales liquidity right here as well, and also daily quadrants of the rejection block. With that to the hourly chart, and you can see right here already, we are expanding aggressively lower. With London, with Asia, with London, NORG kill zone, and also now with AM. Also becomes more clearly on the 50-minute chart. Midnight opening price up here, 8:30 opening price, 9:30 and 10 a.m. opening price, and now we scrap basically daily sales liquidity. Can drop to a 1-minute chart from there. And first, just really quick glance on the regular trading hours chart, and then we will talk about the executions. So basically, we had a regular trading hours opening range gap of 400 handles to the downside, and from there on, yeah, just wicked higher to a quadrant level, and from there really sold off. As you know, I want to see that we trade back to the upper quadrant at least, and then follow our trend. But in such trend conditions, it's kind of obvious that we are not really seeing that, and it's more likely that we're going to see a more aggressive expansion towards the downside. So basically, a only down day towards the sales liquidity right here. Yeah, so back to the executions, and I will talk about my executions, my thinking process, what I did wrong, what I could have done better. I was also a bit unfortunate today, I have to admit, what also comes into it. So what I want to see is basically we have so many high time frame PD arrays right here, which are giving price high resistance to trade lower, and which eventually could lead to a high time frame retracement. That's not what we really did see today. We only took out the buy liquidity right here, and from there only trade lower. I was not really expecting that right on from the opening. So as you know, if we see Asia, London, and NORG open kill zone, so the previous session trending lower, I want to see that AM is a reversal. We opened up right here, trade higher. We did not sweep any important buy liquidity, traded lower. With that, re-swept also the low right here. Also created SMT right here. We did fall short of the daily sales liquidity, but we trade into the 4 hour or daily rejection block. no, in that case, it's only a daily. So the daily rejection block right here, that's the high of it. Trade into it, and from there on, trade higher. That was my first trade. I was sure, okay, definitely want to see at least the engineered buy liquidity right here, because we stopped right in advance of it. So that's right here also engineered buy liquidity, and eventually also just that we sweep the session Yukum kill zone buy liquidity, and from there on, then we are able to trade lower. So that was my ideal bias. Entered long right here, missed unfortunately to enter down here. I don't know why, it was really volatile, and I don't know, I think I also had some delay with my broker, but I don't know. Was also not really able to trail my stop, and then got stopped unfortunately right at CE of our wick right here, and I wanted to trail it below CE obviously. I was a bit late with that, I have to admit, but also yeah, really I don't know what happened with that actually, with the limit order, but re-entered right here, also added right here, and once again I was down, I was a bit emotional, and as I repeated, or as I also already mentioned, I'm more emotional on trading or with trading a funded account, and that's why today was once again such a difficult trading day to me, because normally I just take partials right here or go at least break even and I'm done for the day. This right here should have not been a loss, and then I'm completely up on the day. I'm completely fine with that. But right here I did not even go break even and got stopped down here, and that's a really huge stop loss in that case, and I already lost a lot from there, and from then it was really emotional, I have to admit. And in that case, I just have to admit, once we basically once we fail to stay in the upper half, or in the basically within the fair value gap right here, once this fair value gap fails and we trade aggressively lower, we displace lower, our ATM model, market maker sell model, is in play. So what you could have also done is, knowing that right here we only engineered sales liquidity, we are right in advance of the daily sales liquidity, we do have a strong high time frame bearish trend, that we just wait for the manipulation higher and then take a trade right here with entering for example right here, and then we just aim for the daily lows. This could have been right here a trade. I went short right here, so I was aware of the fact that we displaced below also C of the wick right here, that we're going to trade lower, and got stopped right there, so break even. And then just emotional trading back and forth, went long right here, got stopped, went long right here, got stopped, went long, got stopped, went short, added, got stopped, went long, got stopped, went long, got stopped, went long, and I think I then basically blow my funded with that. Really painful, because I completely know what's happening here and it's completely avoidable. So guys, what's so painful about the trading conditions right here is that I'm aware of how we trade in here, but I'm just really revenge trading at that point, and I don't really know why. It's just so emotional. It's just so painful to lose once again a funded account. It's not even such a big step back. I mean, I passed, I think, the third, so to get my third funded account, I think I passed the EVA in, I don't know, 9 trading days, like 2 weeks. It's not really that it takes long to pass an EVA, but it's just that I'm so confident. I'm getting more and more confident. It's just like building up, and I think, okay, now I'm definitely able to get my first payout, then first winning trading day on my funded, and then crashing out, and all the confidence and all the momentum basically is gone, and that's why it's so painful. But I once again, back to the charts. So we have to accept, we have to be aware of the fact that if we sweep the engineered if we sweep buy liquidity right here twice, especially the wick right here, we have to be aware of the fact that our market maker sell model, our AM retracement, our AM manipulation higher is now done, and we are going to follow our higher time frame trend. And therefore we should have only looked for shorts in here. But even I think to buy right here is not even that bad, because we swap daily sales liquidity, trade back to the upper quarter level, and we still have so much buy liquidity to go for, and we did so much damage to the sell side. But once again, on such a strong higher time frame bearish trend, it's not ideal to look for trades against the higher time frame trend. That's just it. They are going to fail, and when they are playing out, you only get the low-hanging fruit, which is, for example, right here. We've also had so much session SMT with ES being in play, especially if we drop to a daily chart on ES. You can see why we had so strong bullish possibilities, because we scrapped so much trend line sales liquidity right here, trade into the high time frame P-day rate right here, so daily fair gap, and from there it just would have been completely perfect to see a higher time frame retracement. I mean, look at the buy liquidity right here. There's so much to go for, that we leave something like that right here intact. I don't really understand why, I have to admit. We also had session SMT with London lows being in play right here, so to me it looked really perfect actually also to now at least frame a retracement right here. But yeah, NQ really failed to do that. Only trading lower in that case, getting stopped and blowing my account right there. But I don't know. That's just basically it for the funded. And now I want to switch to the eval, because I also took some trades there. So that's the trades I took on my eval, actually up there. But yeah, I took a long right here, and that's also something I did wrong. So whenever we take a long based off basically our reaction of the inversion for gap right here, and we have this clean low right here, we cannot trail our stop based on basically the order block right here or even the propulsion block right here. We have to trail it below the low, because we are basically reacting off, in that case, the fair gap right here or right here. We are not trading based off the inversion fair gap. You can delete this actually, and therefore our stop has to stay below the bodies or even below the wick right here. And therefore the SMT right here is really clean to see, because then we would have not even get stopped out. But yeah, that's just a really way too tight stop, even if it's a relatively large stop regarding the points. But re-entered right here, also added right here, and yeah, ES had so much buy liquidity to go for, but we failed. We trade lower, and I got stopped right there. And that's why we don't want to take basically trades against the high time frame. And in that case, it's kind of already also now obvious that we're going to trade lower, because if we would have seen a higher time frame retracement, we would have seen it right here with the 10 macro, or even earlier right here. But once we basically fail to trade lower, once we even displace or close below CE of the daily wick, it's kind of more leaning towards bearish, that we are going to sweep external sales liquidity and not sweep the session buy liquidity, because in that case this right here is easier to get you than to the liquidity up here. That's why basically this right here fails, and then with the London close macro we just expand lower. So it got stopped right here, we displaced through a quarter level, in that case the upper quarter level, shorted right here, added right here, added right here, and then closed right here. And that with that I'm up on my eval, but which I was also trading I think on Friday. But yeah, it's just really painful to lose my funded account. I think it's not even that bad. I mean, I'm not really losing so much with that. I mean, obviously some money, I don't know, they are not really as cheap as we think it is, because they definitely also add up, but still I think I know better than this. This right here could have been just a beautiful long, and we are done for the day. After we sweep the sales liquidity right here, we have to be break even or take partials. That's also completely obvious. And then once we displace lower, it's obvious that our ATM or the Macro SMR model is in play, that we are not going to trade higher. And then we can look for shorts, possible entry right here towards daily sales liquidity, and we are done for the day. And then we don't touch it. Or right here with the long close macro, we just have to be patient, wait until we displace through the corner level, and then we just rally towards the downside. We don't want to get really messed up basically within right here, because right here we swap daily sales liquidity, so it's obvious that we're going to retrace, but we don't want to take trades against the higher time frame. Even if we see right here a huge retracement to the upside, that's too late. It should have been happened right here. So once we basically fail to trade higher from there, once we trade lower, we have a bearish bias. We have our market maker sell model in play, and therefore we want to fade bullish setups. We don't want to take any longs in here and then we displace lower. That's just chasing price. We have to wait. Still, we have to wait. Would have liked to see that we take out at least the buys liquidity right here. We also did not even form SMT right there. So that's why to frame anything in here is still really bad. But once we displace through the corner level, through the upper corner level, it's obvious, okay, now we are way more closer to the external sales liquidity than to the session buys liquidity. So it's obvious that we're going to expand lower, and therefore the trade right here with the long close macro would have been also a possibility towards the downside. So 3 setups basically: taking a early long right here, taking partials and going break even right here, or even full porting, or not full porting, full closing at the low hanging fruit. Then the second possible trade would have been entering within the market maker sell mode right here. We could have also looked at it right here as a sorry, that's wrong, as a large order block from the low to high basically. And once we close below it right here, we can also could have also entered right here, and that we shorted right here or right here. Basically, that's our institutional order flow anti-drill, and just back to daily sales liquidity. It's obvious that this right here is not going to be our trade towards completely the downside. It's not going to be the trade which is back to minus 0.5, because in that case it's just too early. That's why right here we have also to aim for the low hanging fruit, even if we are aiming for, or even if we are trading aligned with the higher time frame. It's just that we are trading too early, and we are going to see a retracement from there, especially with 10 AM. Right here we have to fade everything because we are not bullish and we are just expanding lower, and we are already oversold, and we need to wait for the right time before we can once again expand lower back to or targeting external sales liquidity and minus 0.5 extension of our price range, so opening range. That's basically what we did with the long close macro after displacing through the upper corner level. So that's the 3 setups we can take. Yeah, that's basically it. So still have to improve, still have to avoid crashing out. That's really just it. Really painful to crash out. So much momentum gets destroyed. But to me, like, having trading rules, like trading only like 1-2 trades a day, is also not really always working out, because I'm still taking trades which I should not take, and then I basically miss out on the right trades if I trade like only taking, if I like trade after trading rules, if you get what I mean. But I still just have to get better with stop loss placement, with being more patient, with taking the right trades, with being also aware of the fact if I trade aligned with the high time frame or against it, and then if I aim for expansion or the low hanging fruit, if I full close or take partials, if I go break even, or if I have a wider stop and high resistance. There's so much about it, and that's just what we still have to improve on, but we definitely will get better. I'm passing, you have to see it positive as well. I mean, I'm passing more and more evals. I'm passing even them quicker than ever before. I'm still getting better, even if it's like a huge step back. It's just I'm still getting better. It's just a short-term low basically, and the higher time frame is bullish. But that's just it. It's not failure. It's just my, I don't know. It's just my 3rd attempt. For example, if you would knew that with passing your, let's say, 6th or 8th eval account, that with passing that, with trading your 8th funded account, that's the one where you get your first payout. How quick do you want to fail the first 7? So that's what I'm trying to get at. So obviously it's a failure to blow your funded account, but it's also just a, I don't know, a 3rd attempt trying to get the first payout, and we learn from our losses. That's the right thing. We have to still journal. What I also really like is how we actually traded right perfectly back to CE of the price range right here. That's why this is such a strong institutional order flow entry trade right here. Yeah, I think we'll get there. It's just we have to not crash out, and we will get there. Yeah, see you soon, guys. Safe trading. you.